Welcome everyone. In this video, I'm going to cover two topics. The first one is going to be two industries that have thrived today, Friday, April 4th. Those two industries are the residential construction and footwear and accessories. Quite interesting because these are within the consumer cyclical sector. And as you probably know, that sector was absolutely, hit with the tariffs. So why are these up? I'm going to go through the details in just a moment. But I want to clarify first my thesis on the tariffs to give you my opinion and my beliefs on where I think the tariff policy is going. So let's start first with the tariff topic, and then I'll go into these two interesting industries that, interestingly enough, in this bloodbath of sectors, industries, stocks, you can see Nike is up. What? Nike, that's how you pronounce it. And then you have residential construction. What? You can see all those stocks up. Some of them by 10% today. Okay, let's start with the tariffs. This is a post that I have to say, when I read it today, I was really tuned into the market. I usually don't care about macro. I focus on companies, I focus on equities, I look at fundamentals, I look at stuff that's specific to a company. I really don't care about macro BS because that's not going to help me to understand whether a certain stock makes sense or not. That's not true, and it's not correct in this current landscape. Yeah, so when the markets are up, you can disregard what's going on in the S&P. But when the markets are down, you have to be tuned with this shit. And you can see this. I read this and I was actually excited. He said, my policies will never change. And he addressed this because many, as you can see there, many investors, are coming to the United States and investing massive amounts of money. He's probably referencing to those investors that are bringing back the plants or want to internalize production into the US. As an example, imagine a Chinese manufacturer. They manufacture plastic or whatever they manufacture, and they want to build a plant in the States. Yeah. So he's saying, don't worry, my policies will never change. Amazing. Yeah. So I was really happy to see that, because certainty brings stability. And I believe that stability is what's going to make the turnaround in a V shape. Yeah. So V shape, I mean, you can see this shit is going down. V shape, it means that, here it will be the rock bottom and we'll go back up. Bullshit. That's not going to happen. Not in the near term, at least. So let me go back to the post and explain why. So we got this, yeah? So policies will never change. Then we had April 3rd. You probably know this. So we have Trump saying, this was just after he announced the tariffs, the list of that huge Excel file, that he presented. Trump says that, if China, provides a deal for the TikTok, facilitates the TikTok deal with the US, he could lower the tariffs. Yeah? What? Didn't he just say that, the policies will never change? And now you got this, It doesn't stop there, by the way. It doesn't stop there. And this is going to be related to those two industries that I mentioned before. You can see in a post, so he's working very hard to save TikTok. And let me explain my thesis on why I think that whole tariff thing is just BS, and it's just a negotiation weapon that the US is using. It's weaponizing tariffs to get better deals with the countries. Let me explain why. So the tariff list, I have it here, is for China is 34. Yeah. It's not 34, actually. It's 34 plus 20, which is 54%. Yeah. So if an iPhone costs, I don't even know. I have a cheap phone, secondhand, who knows? I got no clue how expensive is an iPhone. I should know, because I did analysis on Apple not too long ago, but I got no clue, to be honest, right now. So that phone is going to cost 54% more. What happens if you bring a car? The car is going to be 54%, And on top of that, you have sector-wide tariffs, which are 25%. And that's on top of the 54. So that's an insane amount of tariffs that you have to pay, especially if you're a semiconductor company, bringing stuff from Taiwan. It's gonna be crazy for Nvidia, because they work with Taiwan Semiconductors. Same with AMD, the main supplier, the main foundry. Anyways, I'm going on a tangent. Let's go back to the main topic. So the main topic was this. The tariffs. He said that are the most powerful economic tool. Okay, so what's this? Is this a fixed policy, as he said in this post, or is this an economic tool, which is essentially what I said before, using tariffs, weaponizing these tariffs to get better deals with the countries? In which case, if that's the case, the tariffs are not going to stay. The tariffs are going to stay until the countries agree on Trump's terms. So let's try to understand a little bit more the trade with China. Yeah, so we have, this is from the Office of the United States Trade Representative, and we can see the imports into the US from China in 2024. So we had slightly more, slightly over $500 billion in goods. So this is goods, it's not services. When you look at imports, you have to consider both goods and services. So this is just goods, which is the majority, by the way. So that's about 284 billion. Great. How much did the US export to China? 143 billion. That's a quarter of the amount China imported into the US. It's a quarter. And I really don't see the logic on why it makes sense to tank the whole market to have a better deal for 143 billion. Maybe imagine that you can improve the deal where I believe China was charging, was it 20%? I'm not really sure on the previous figure. I know now it's 34% more. So it's like 50 something percent in total. I'm not sure why it makes sense to save like 10% or 15% on 143 billion at the expense of tanking the entire market. I just don't get it. It might be a 4D chess move, something that nobody understands, and we're going to all be surprised about something interesting that's going to happen, but I don't think it will be the case. So this is the price you pay, the cost of opportunity, as you say it. And yeah, and these are the values, and it just doesn't make sense for this amount. If the US was importing more than China, then yes. In any case, you probably have seen these values, like the tariff charged to the USA. And then you have a very interesting post in the Financial Times. Amazing. So this is a meme. And you have the formula that was used. The author of the article has doubts whether the administration actually checked the paper that they said that they referenced the formula. Essentially, they're simplifying the formula from, this to that. So they reach this conclusion, which is crazy. And they say that those tariffs that the other countries apply to are the trade deficit, which is exports minus imports. Yeah. And you divide it by the imports. So just let's use a very simple example. Exports equals 1, imports equals 1. Which means, imagine in the case with China, the US exports the same amount as it imports from China. In that case, this will be 0. Yeah, simple. Now, what happens if the imports are 1 and the exports are 0, or let's say near 0? This will be about 100%. Yeah, this will be 1 in this case. Yeah, the value. So that's the reason why I'm not really, me and probably no one is happy with these figures, because they're based on a formula, on a simplification that doesn't make sense. And that's not the actual figure that these countries are charging the US. It's just the trade deficit divided by the imports. And if the imports are really small, which is the case for Cambodia, Taiwan, not Taiwan, Vietnam, in that case, that value is going to skyrocket. So speaking of these countries, yeah, let's keep on with the reason why I think the whole tariff thing is a bluff. You know, it's not a bluff. It's gonna happen, but they're not here to stay. They're not again. This statement, I just I don't like it. You know, like my policies will never change. And then we have this post, you know, which was today, and we have To Lam, which is the general secretary of the Communist Party of Vietnam, and he had the call with Trump, yeah, and he says that he's willing to take the tariffs down to zero. Again, the tariffs that Vietnam is charging the U.S., I don't know the exact figure, but I believe are significantly less than 90%. I don't know the figure. This is a speculation, but I believe it's less than 90% because this value was used with this formula. And in this case, if you import significantly more than what you export, you know, that tariff is gonna be 100%, you know, in some cases. And fair enough, we had another president, another prime minister from Cambodia, and it, you know, again, he wants to have a meeting with Trump to renegotiate those tariffs. Great. So let's look now at the figures. You know, so Vietnam, we got Cambodia. How much the U.S. exports there, and you can see here. So the import from Vietnam into the U.S. is about 150 billion. Yeah, last year. Last year, the exports from the U.S. into Vietnam, it was 13.1 billion. I mean, come on, let's assume the tariff is 50%, imagine, or 90% or 100%. Like 100% on 13 billion. You know what I mean? Like, where is the business case on tanking the stock market to save 100% of 13 billion, which is a 13 billion cost saving? I don't know. I personally don't see it. Call me crazy. I just don't see it. And with Cambodia, the thing is even crazier. You know, we got 13 billion, so this is U.S. goods exports to Cambodia, and sorry, this was the import from Cambodia, about 13 billion, and the exports. So the export to Cambodia were 321 million. Exactly. Sorry. So let's clarify it again. Yeah, let's clarify it again. U.S. imports from Cambodia last year, 13 billion in goods. And we have last year as well, the U.S. exported to Cambodia 321 million, which is it less than 1%? Let's calculate this. Not less than 10. Sorry. So 321, you know, divided by 13 billion, 2.5%. So compared to what the U.S. imports from Cambodia, it exports 2.5%. And are you gonna tank the market for saving some tariffs on 321 million a year? I mean, I don't know. I think it's a 4D chess move. Let me tell you that we really don't know what's going on, and I don't know it. Now, related to these negotiations that were announced today with Vietnam and Cambodia, of course, you know, speculators in the market or investors, call it like that, capitalized on this. Yeah, so we have retailers, particularly what we have seen before, the footwear and accessories industry. So they actually spiked today. They were up, you know, and then you can actually see here. So I have Stock Rover. I absolutely love this tool. Really professional to show you the data. So this is the entire footwear and accessory industry. Yeah. And you can see here the S&P 500. You can see, you know, it was down this week. Bam, bam, bam. April 4th, hang on, bam, turn around. So if I see the one-day performance, it was up by 0.4% today, whereas the S&P 500 was down by 6%. So you can see clearly the impact of the tariffs on a particular industry that in this case was favored by, I wouldn't say rumors because Trump confirmed it and Reuters confirmed that these presidents talked to Trump to lower the tariffs. And you can see here the effect. So as soon as the tariff issue is gone, yeah, or it could be gone in the near term, you can see what the market is doing. It's doing a V-shaped recovery. And that's exactly when I believe is gonna be a good moment to buy the dip. So I don't see any signs right now of these tariffs disappearing anytime soon. But as soon as those talks, particularly for TikTok, because I have here, what was the post here? So TikTok, the deal was supposed to stop, to come to an end this Saturday, and I was not surprised to see this extension. And why is there an extension? Exactly for the reason I said before, because Trump was looking for a deal with China, and the deal didn't come to happen, to fruition, and of course he had to extend the period to see if China will fall down. And they haven't. They implemented 34% on tariffs after he said, if you get the tariff down and the deals, sorry, if you could get the deal, if you could facilitate the deal, then we're going to get the tariffs down. And it didn't happen. So, yeah, something to consider there. Footwear was up, great. And, well, another thing that I got to say, I'm not really sure why this is going to be a full opinion, zero facts. This is just my thoughts on this. I believe the reason for the tariffs are not to negotiate terms with third countries. Yeah, so again, does it make any sense to save a tariff on 321 million of imports into Cambodia, or how much was it? 13.1 billion in Vietnam compared to 150 billion that you import from Vietnam. It makes no sense. At least it doesn't make sense to me. So what I think, again, full speculation, I think that the whole fuzz around these interest rates is to artificially increase inflation. Yeah. At which point, I believe Trump will expect the Fed to lower the rates. And as soon as the rates are lower, maybe 2.5%, who knows? I really don't know the target. As soon as those rates are lower, then you get rid of the tariffs. That's my speculation on where I think the tariff saga is going to come to an end. I believe the whole reason for a tariff is to push the Fed to lower the rates. And as soon as the rates are down, tariffs are gone. And that's the purpose of the tariff, is to get that rate down. Because otherwise, 2 rate cuts a year is too slow. That's 50 basis points. And, that's not enough. And, if you want an economy that's stimulated, you need to lower that rate. Call me crazy, fully opinionated. I may be insane, but that's why I think the 4D chess move is orientated. It's probably not orientated towards having an advantage over the, supply partners now. It's probably to get that interest rate down. Of course, during the session, Jay Powell said, did he say an indirect FU? Probably. He said, I don't look at politics. There was a question I liked from one of the presenters, one of the journalists. It was in regards to the tie color. So she said, why do you wear, or are you going to wear a purple tie in the next FOMC meeting? Which, by the way, I think it's in a few days, like a month, I think. I'm not sure if I have here a tracker. Yeah, 32 days. In only 32 days, we're going to have that meeting. Great. So she asked the question, and he was like, yeah, I like the purple color, but in reality, I cannot choose either red or blue, referencing, of course, to Republicans and Democrats. And the reason why she asked the question is because of this post, where just 20 minutes before that meeting today, Trump said, this will be a perfect time for Jay Powell to cut interest rates. He's always late, but he could now change his image quickly. I mean, if you're trying to get this guy to lower the rates, probably the last thing you should do is to make a statement like this one, which is true. Do not get me wrong. 2007, you probably know what happened. 2020, that was not really uh, quick to say, and 2022 as well. There is always a delay in how the rates adjust to the economic landscape, but there is a reason for that delay. Is because you can't take decisions right now based on sentiment. You need to cool off. So my point is that he said during the session that he's not looking at politics. He's not interested about political parties, political opinions. It's zero. So they don't touch that. They just look at data, and data says that right now it makes sense to keep those 2 rate cuts. That said, let's see what the market thinks. So I love this FedWatch. This is from the CME group. What we have here is a survey, the results of a survey to important economic people. I don't even know how you call these guys. Smart, significantly smarter than me. And you can see here the expectation of how many rate cuts, or in this case, where do they believe the interest rate is going to be in the meeting, in this case, for 7th of May, 2025. So that's the next meeting. So the market right now expects 1 rate cut. Sorry, 0 rate cuts for May, because we are in this range, 425 to 450. So this is the range we are today. Great. If we go to the 18th of June, so that will be the next FOMC meeting, we can already see the first rate cut to 400, in the range of 400 to 425. So we have one. July, we have the second one. So 64% of people believe that they're going to be 2 rate cuts by July, which is quite early. We have already half of the year ahead. So what happens with September? September, we have a third one. So 3 rate cuts. The market is already pricing in 3 rate cuts. If you look at October, 350 to 375. So again, 3. They believe probably October is going to stay like that. December, 325 to 350. 4 rate cuts this year. And if you go at January, I believe it's going to be the same. 325. So about 4 rate cuts that these economists from huge firms, these are not the usual Joes, these are big guns. They believe that there's going to be 4 rate cuts this year, which is crazy because that's double the expectation that the Fed had, and the Fed still has. So, moving on, we have, this is I think this was my last topic on the tariff. Now I'm going to go back to those 2 industries. So to wrap up, I believe that this is gonna, I don't think 4 rate cuts are going to happen. I think 2, 3 tops. And I think the tariffs are going to be gone as soon as probably China agrees on the TikTok deal or facilitates the deal in those next 75 days. And once that happens, perfect. That's the moment when I believe confidence in the market is going to come back up in the same way that we have seen today, the footwear and accessories industry, which is highly cyclical, highly susceptible to these tariffs. But as soon as you see the rumors or the positivity, from potentially removing these tariffs, you can see what the market did. Bam, up when the whole S&P is down 6%. Crazy. Great. The other topic, very quickly. I know this video is already long. Residential construction. What happened here? This is again consumer cyclical, and we can see a significant amount of companies within the industry that are up. What's going on? So you probably know from the beginning of March, there was already this was not intended to be a tariff on lumber, so the president didn't announce that, but he started some investigations, from his department, I guess, to understand if there is a national security from imports of timber and lumber. So I think there was a deadline of about 200 days or something. 270 days. Yeah, so the Secretary of Commerce shall submit a report to the President that includes findings on whether imports of timber lumber and their derivative products threaten national security. Again, I really don't know what the details of that national security are. That said, that said, this was quite negative in the market because people were expecting, oh, we're gonna find tariffs on lumber, and in the U.S. the construction industry relies on lumber. In Europe, no. In Europe, it's quite infrequent to find houses made out of wood. I mean, that's crazy. Here you use bricks or cement. Great. What happened with the bull run is that on the fact sheet, from April 2nd, if you do a Control F by lumber, let me just see. Control F. There you go. We have a number of goods that will not be subject to the reciprocal tariff, and this includes lumber and copper, which as well is used in home building. So we have lumber articles are not susceptible to the tariffs. Amazing. And this is one of the reasons why the residential construction industry is up, is because they are immune for now, probably not for too long, because we still have to see what's going on with that report from the Secretary of Commerce. But yeah, it seems that the residential construction segment, you see, if there are no tariffs, they go up, which is good, So this is this is the reason why. There is a second reason why I believe today we have seen a bull run, not a bull run, but let's say a stabilization, at least in the residential construction industry, and it's because of the 2-year bond yield, which usually is the benchmark to understand where interest rates are going to be. And if we look at today's performance, I still remember this because I was up at this time. It was 3.5%. So, of course, when the market is anticipating that interest rates are going to come down to 3.5%, generally, not always, but generally, that's good for the construction segment, construction industry, sorry. And the reason is because, consumers can now get loans at a better rate. And usually that stimulates construction. So you can see how everything is so interconnected. It's crazy the amount of relationships you have between industries, sectors, what people say, what people do. It's insane. So this was my point on these two interesting sectors. That said, I will not buy anything on this. I don't think I will do it in the near term, I gotta say. If we look at stock rover, just to finalize the video, let's look at the residential construction sector. I love this tool. I gotta say, I was sold as soon as I saw it. So construction, residential, there it is. Let's chart the entire industry and compare it with the S&P 500. And this is the performance today. Yeah, so today it was up by 1.5%. All the stocks within this industry. Great. That said, if we go back to the year-to-date performance, ouch, it follows the S&P. So you can see the sell-off, it's slightly less than the S&P 500, which is year-to-date 13.5%, and this is negative 8.3. So my point is, just because one day this industry outperformed the S&P, it doesn't mean that the industry is immune to a further sell-off in the broader markets. And the same happens, with what was the name? Footwear and accessories. So if I was to chart this industry year to date, it's actually worse than the S&P, like twice. It's the sell-off in this industry was twice as much as in the S&P 500. And the main reason, again, is consumer cyclical, and usually consumer cyclical underperforms in a bear market. In fact, I will finish the video because this is crazy long. If you're watching, what are you doing with your life, man? I will finalize by showing you the performance of all the sectors and compare it to the S&P 500. So if I go to sectors and chart all the sectors, there you go. All right, so you can see the ones that are outperforming. I'm just gonna delete because this is an industry, it's not a sector. So here we have all of them. Yeah, this is the S&P 500 in blue, and the two that underperformed are the technology sector, down 23%, and consumer cyclical. As soon as I find it, where is it? There, 19.7%. Yeah, so these are the two that right now I wouldn't touch. Catching a falling knife, it's usually not my style, usually, unless insiders buy. And as I shown you in my previous video with my portfolio update, I was short on a lot of equities since the beginning of March, and I capitalized today quite well on the sell-off. Charts, check this out. This is the main metric I'm going to have a very close look at to understand when the turnaround is close, is nearby. So this is the total number of insider buying per day. Great. You can see here, during the panic sell-off in March 2020, we had a spike of insider buying activity, which is great. If I go to the SPX chart, March 20, huge sell-off. I mean, check this out. Crazy, bam, 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 bam. And insiders were already buying here. Yeah, so they were buying the dip, call it like that. And of course, the market turned around. How long it took? So March, May, 2 months, So if I look again at the chart in 2020, what a surprise, they also bought. They bought the dip, call it like that. Bought the dip, bought at a cheaper price. Same happened on May, and then we have March 2023, which was just the moment when the bull run started. If you have a look here, we got May, May 22? So spike in insider buying activity. And then we had March 23, where is it? It's here, which is the beginning of this crazy bull run. So to me, insider activity is fundamental to understand when the people that know significantly more than I do, when they buy. Because, they own stock and they have insider information. They have all that, stuff that makes them more knowledgeable than me. And if I was to see a spike right here, whenever this year, in the summer, autumn, who knows? But if I was to see a spike in the same range as in 2020, well, 2020 is going to be difficult. I really hope that's not going to happen. But 2022, then I would consider to start buying and to start adding positions, even though probably that's not going to be the rock bottom. It's going to be close to the rock bottom. So this is one metric that I'm using, and the other metric I'm using is technical analysis. Can you imagine how crazy I am? What's this? Is this a value investor or a degenerate? Maybe both, I guess. So this is my target, 4,800. If the price goes here, who knows when, that's the moment when I will be starting positions in stocks. Even if it sells off a bit more, I don't think, everybody thinks it's going to be the same as back in, in the 2000s, the dot-com bubble, where it took, how long it took? Like if you buy here in 2000, it takes you 7 years to have a 0% return of your investment. This is not going to happen. I don't think it's going to happen. Because the issue here is the tariffs, and you can see clearly tariff rumors, and you can see the tariff announcements. So to finalize this crazy long video, thanks again for watching. I'm planning to do these kind of videos. I'm thinking to them as a live. Please let me know if you would like that. That's it for now. I will stay on the sidelines, see what happens, and then based on technical analysis and insider buying activity, And of course, based on the news, let's see what happens. Let's see, are these tariffs disappearing? Are they not? If those three things point towards a turnaround, that's the moment to buy the dip. And I believe it's going to be a V shape, similar to 2020. I do believe this, because as soon as tariffs are gone, stock market is going to rally. So that's my thesis. Thanks for watching the video, and I hope to see you in the next one.